Hey everybody, Chuck Barone, Tuesday, September 20th, 2022. Thanks for being here, your support for the videos and the channel. You guys mean the world to us. We appreciate you. Today's kind of a blah day, guys. You know, we know tomorrow's the big day where the Fed announces the move. Everybody's already kind of, I would say it's pretty much etched in stone that it's going to be a three-quarter of a point increase in rates tomorrow. There's an outside chance, a very small chance, that it could go as high as one full point, 100 basis points. I don't see that happen really. I think the Fed kind of has this schedule. I think they're going to kind of stick to that schedule. It's what the market, they want to give the market a little bit of certainty, even though what they're doing, the market's not really big fans of it. If they have a little bit better of an idea that the Fed is saying it and then following through with it, you know, most government entities don't have much credibility, but the Fed being first among those. So it'd be nice to have a little bit of certainty. Okay, they're going to raise rates. We understand that. We all want the inflation to go down. But it would be nice if there was some certainty as to when and how much, how long. We're going to learn a lot of that tomorrow after the announcement on the rates. In the markets today, just kind of a blah day. Not a lot of volume anywhere, but a little bit of action. Stock market down today. Stocks not really having a great day, down about 1% across the board. NASDAQ, S&P 500, and Dow all declining today. I think they're just having a sad about these rate increases, this new environment we're in here, and not to mention the fact that Ford came out with some earnings disappointments. I guess they're having some supply chain issues, a lot of vehicles that could be sold that aren't going to be because they can't get parts and pieces they need. So market down today. We'll see how it reacts tomorrow when the actual news comes along. I guess in the market, don't they say buy the rumor and sell the news? We'll see. Bond market today, market down, yields up. 10-year settling at 3.57%. Get used to these new numbers, guys. The 2-year sitting at 3.95%. This is all part of the cycle. You know, these credit cycles, we've been these credit cycles come and go, as we all know, especially if you've lived a while. And we've lived through a very extraordinary time of cheap, easy money. That era, as I've said from way back in the very beginning of the blog, that era is ending. We're moving back to a more normal situation like we had, I'm believing like we had pre-2008 crash, because this is the last time we've seen rates this high. We need to get these rates up. As I've explained on the show, you know, inflation's 8.3%. With this increase tomorrow, the Fed funds rate will be sitting at 3.1%. You know, everything all the way smashed from overnight to 10 years, basically in that 3.1 to 3.9% range there. So everything's kind of, the yield curve's getting compressed, another sign of recession, not a good thing. But anyway, we know that rates have to come up at least to meet the rate of inflation, right? So if inflation's 8.3, ideally your interest rates are, in a world that could tolerate that, would be 8.3. That kind of rate will knock demand down. As I've said before on the show, guys, it's not the raising of interest rates that really is what knocks inflation down. So the Fed doesn't raise rates, and that just the raising of rates takes inflation down. It's not the way it works. It's not like, a pill for inflation is raising interest rates a half a point. What happens is the interest rates go up. In a particular case, like in this inflation we're dealing with here, typically rates are going to go up enough to cause a recession. The recession and lack of demand caused by that recession then are what start bringing prices down and bringing the inflation down. The last time we had an inflation like this, we had to have a pretty severe inflation. We had to have a pretty severe recession. Unemployment had to reach 10%. So we got a ways to go in this inflation fight here, guys. So these rates we're seeing on bonds today, these are going to seem low 6 months from now. The dollar today, because of rising rates, obviously the dollar up today over 110 on the index again. No currency around the world coming close. Although a lot of foreign governments are raising rates shockingly high. Sweden now coming out raising their interest rates a full percentage point. So it looks like some governments around the world are not only looking to fight inflation back with higher rates, but to protect their currencies as well. The stronger dollar, of course, as we've explained millions of times, putting big pressure on the metals market. Metals were down today. Gold settling at $1666.80 per ounce. Silver at $19.32 per ounce, both down today. I've had a lot of people asking me why I only talk about gold and silver, so I'm going to add, I don't want to be going through a long list of metal every day, but I'm going to add one on occasionally if I see something I think is interesting. And today it's rhodium. Rhodium has when you buy and sell, there's a bid and an ask, right? So the bid is the buy side, the ask is the sell side. This was the kind of weird thing I saw in rhodium today. The bid side, the buy side, if you want to buy rhodium, $14,950. If you want to sell rhodium, the ask side, $12,950. $2,000 spread, guys. That's huge. I was really surprised to see that, but I got it off the Kitco site, which is typically pretty reliable, so I thought that was interesting. You rhodium people out there, I know that people have been talking about rhodium. It's been a profitable metal. Let me know what you think of that spread. Is that normal? Oil today, down $84.19 for a barrel of West Texas Intermediate. Natural gas, $7.70. Coming down. Natural gas was well over $9, now down to $7.70. Oil's been choppy. They just have so much conflicting information on oil. There's so much uncertainty in that market. It's really been kind of holding steady between 80 and 85. And here we are at $84. Bitcoin today down, small, holding 19,000 support. I think it's going to test the recent low about 18,500. Hopefully get a bounce from there. Bitcoin not looking real steady right now. I think Bitcoin's kind of been moving with the market, which is a surprise to me. So I think if the market can have any kind of rebound tomorrow, Bitcoin will probably rebound with it. And news you guys need to know today, we've talked about real estate. We've talked about the crash coming in real estate. It's already started. It's going to be kind of not a crash like an overnight 1929 crash or an 87 crash. It's going to be a slow motion crash where prices just keep coming down, coming down, coming down, coming down. Today we came out with builder sentiment. We came out with housing permits, pulling permits, housing starts. And here's the headline from today's Las Vegas Review-Journal. Builder confidence in free fall. Crushing. Not good news for real estate. Builders pulling permits, not building. What I saw here now, this article focused on Southern Nevada. New home purchases year over year down 61%. That's a pretty big correction, guys. 61% is basically a crash. So new home builders not selling houses. The vast majority of them now, 25% have already cut prices. More than 50% offering incentives. We'll give you the granite countertops. We'll pay your closing costs, all that kind of stuff. Sales down, like I said, 61%. Here's the bad news, though. Permits also down pretty dramatically, down 50%. So what this kind of does is it leads to the squeeze down the road where the supply gets kinked up because they don't want to be pulling permits, building houses when prices are down and going down. So what happens is down the road, they scramble and try to hurry up and build houses real fast to keep up with demand. And there's where we get the bottleneck and prices starting to go crazy when there's demand. And this is going to be supply with not a lot of demand. And that's what's happening in real estate right now as the amount of people trying to sell their houses goes up. The amount of listings here in Las Vegas is almost quadrupled since May, but there's no demand for those houses. They're sitting on the market longer. So everything boils down to the basics, guys. That's what this whole show has been about since the very beginning. The basics, the fundamentals will never let you down. They always work. And this supply and demand stuff on real estate, you can see where we're going with this. Demand is completely cratered out, and there's still supply and more supply being added. So now we got prices coming down, and I think by the end of this month, we're going to see a median price here in Las Vegas of around $435 or so, which would be almost $50,000 less than the peak just over the summer. I mean, big, dramatic differences. Tomorrow's the big day, though. It's what we've all been talking about and waiting for this week. It's not only the Fed rate increase that everybody's waiting for. Everybody wants to hear what Powell has to say. And not only that, the Fed's going to be releasing these papers with forward guidance that's going to be really more data than the chairman typically gives when he gives his little after FOMAC speech. I think he's going to talk pretty sternly tomorrow. He's going to try to reinforce the idea that the Fed is serious about taking this inflation out. They're going to do what they have to do, including raising rates maybe higher than people think and keeping rates elevated for longer than people think. I think, if you try to be a smart person and live right, this is a great opportunity to turn lemons, which is a crappy interest rate environment, into lemonade, where if you start saving some money, putting some money away, you don't have to really be thinking about how to invest it, because you'll be able to earn some money in your money market account. With rates moving the way they are, we could see money markets up to 3, 4, or 5% down the road. A nice, really not real complex, pain-free way to get some money that you got stored aside and not have to expose that money to any kind of market risk. But anyway, Powell tomorrow, big day. Now here's the thing that really was interesting to me. I was reading a little bit about this morning. They're saying that Powell and the whole FOMAC meeting, the whole committee has got a lot to deal with this inflation, dealing with the economy and everything else. But now added into the mix is this election coming up in November. So Powell and the Federal Reserve will have two opportunities to raise rates before this election. They're going to have their chance tomorrow, which they're going to probably raise 3/4. Then they'll meet again and announce the next rate move on November the 2nd. I think the election day is on the 8th or the 6th, somewhere in there, just about within a week of that day. The problem they're having now is, of course, they're getting pressure, or I guess at this point it's advice, not quite pressure, where the Democrats on the one side want the Federal Reserve to go slow, take it easy, not bring the economy into recession, because of course that's bad for their politics, while the Republicans on the other hand want them to get rates up there faster. They want to get this inflation under control because that's what they're hearing about from their constituents. And of course, they're not defending the House and the Senate. They're trying to take over. So being an inflation fighter is a good thing to be seen with this in this environment for this election. Now, here's the thing, guys, you got to remember. You're going to hear a lot of noise. You're going to hear it from Democrats. You're going to hear it from Republicans. You're going to have the Fed yo-yos out there going up and down with all their stuff. You're going to have Janet Yellen. You're going to have White House economists. And you're going to have all these people out there trying to confuse the crap out of you with a whole bunch of conflicting different messages suitable to their political needs or their political wants, okay? Here's the thing to remember, guy. Here we know the truth, okay? We know the truth that the Federal Reserve, to get this inflation down, has to raise rates enough to cause a recession and slow employment down, raise unemployment numbers to tamp down the growth rate in wages, which have been rising, adding more to the inflation, adding more pressure for prices to go up, because this is something that businesses quickly want to compensate for by raising their prices. We know that this recession has already started. We've been doing this for a while now. I've made the analogy a while ago about the snowball starting down the hill. We've been in front of this thing for about 2 months. We're about 2 months ahead of where the world is, I guess, on this stuff. We've known this stuff was coming. What we're seeing right now, we've known is coming. We've talked about it on this show before. All of this stuff that's happening. Keep your eye on this Federal Reserve meeting tomorrow. We'll talk about it, of course, on the show. We'll see if they release the papers before we get the show up tomorrow. If not, of course, that'll be Thursday's main topic. Tomorrow we'll have Powell's speech and, of course, whatever they decide to do with rates. Again, we're figuring 3/4. So tomorrow is going to be a very big day. Just remember, though, guys, the Fed has to induce a recession to get inflation down. That is what's going to happen. Okay, just remember that. All the other stuff, speed of it, depth of it, all of that's it's just blah, blah, blah noise to confuse. We know where we are, not good. We know where we're going, even worse. So let's prepare. Let's act accordingly and take care of what we need to take care of to prepare for what's here and what's going to happen in the future, going to get worse for regular consumers. Anyway, that's it for today, guys. It's a short show. Tomorrow's a big day. We'll be on. Looking forward to talking to you guys tomorrow. As always, if you like what you're hearing, hit that like. Ask your questions in the comment section. Don't forget, if it's a little more in-depth, ask Chuck Barone at gmail.com. For more in-depth questions, stuff that's a little bit more you don't want to put in the comment section. Anyway, guys, big day tomorrow. Until we talk then, take care. Thanks.